Hi, everybody. It's Lisa from Been There, Got Out. And today we are with Terri Morris and Nancy Rossner from the Community Tax Law Project. We promised we would expose you to because it's getting to be tax season. And we thought that this material would be so relevant for many of you. So welcome, Terri and Nancy. And tell us a tiny bit about your organization first before we get into questions.
Great, thank you, Lisa. So I'm Nancy Rossner. I'm one of the attorneys with the Community Tax Law Project, and we are a low-income taxpayer clinic located in Richmond, Virginia. We provide free legal resources to taxpayers in Virginia that have tax disputes, either with the IRS or with the Virginia Department of Taxation. We are part of a national program, so if you're not in Virginia, it is possible that there's a tax clinic in your area that may be able to assist you if you need more than advice and might actually need representation in a tax matter. Our income eligibility guidelines, because we don't charge for our services, our taxpayers, our clients have to qualify by income. So that's up to 250% of the federal poverty line based on household size. But we provide legal advice, we provide representation, and we also focus on education and outreach to the public. So I'll turn it over to Terri to introduce herself as well.
Hi, everyone. My name is Terri Morris. I'm a staff attorney at the Community Tax Law Project, and I'm also a Christine A. Brunswick Public Service Fellow. Through this fellowship, I am working with the Community Tax Law Project through my Fight Against Financial Abuse initiative to bring more awareness about the tax consequences that can occur with financial abuse in a domestic violence situation or relationship. Through this initiative, I want to make survivors more aware of their rights as taxpayers and also educate service providers and, of course, the survivors themselves as to different remedies for income tax issues that can arise out of financial abuse in a domestic abuse relationship.
Thank you so much, both of you, because this is so important, and it seems like such a niche area, but it has such profound effects. I mean, we know that financial abuse takes place in probably, I've read 99% of domestic abuse situations, and taxes are a huge way that people use power and control over their partners as well as their exes. So, before we even get started, Nancy, you said that some people, well, obviously a lot of people watching this won't live in Virginia, but how many other states approximately do you think have tax clinics like yours?
So there's actually one in almost every other state. There's over 100 nationally. Some are associated with a law school or a legal aid organization, and very few are independent. We're actually one of the few independent clinics. We're a standalone nonprofit organization. But there is a map and a resource, and I'm happy to share with you that information, so maybe you can link to that as far as there's a list of all of the different low-income taxpayer clinics. They do change a little bit from year to year, just depending on funding, but a lot of them do tend to stay the same.
Okay, so that's great. So I imagine even if someone didn't have access to a map, if they know just to contact a law school or a legal aid clinic, that's another way they might be able to find something like your organization if they don't live in Virginia.
Potentially, yeah. Or I think they could just Google, low income taxpayer clinic and the state, and they may be able to find the resources that way.
Okay, great. All right, now we're going to get right to the questions. So the first one we have is, with the current filing season, what do you think is most important for victims to know when filing their taxes?
So this is one of the main reasons I think we wanted to do this, is because it's so important, especially this filing season, to file your return and to understand the consequences of filing or not filing. The big deal about this year has to do with the stimulus payments that went out last year. So if you didn't receive your stimulus payments, the first one was $1,200 per person and $500 per child. The second one was $600 per person and $600 per child. And if you didn't receive what you believe you were eligible for, you are supposed to claim that stimulus as a credit on your 2020. And that would potentially provide a refund on your return, which is going to help support you financially. It's also going to update your information in the IRS system so that future payments that go out are going to be based on the most recently filed tax return. So that's where we're seeing sometimes survivors are having trouble accessing their stimulus payments because the payments are going out based on a previously filed return that either they agreed to or maybe didn't even agree to that their abuser filed, and then they're being denied access to that stimulus payment. I do want to quickly mention, I know we didn't really talk about this yet, Lisa, but it's just such a recent change in the law under the American Rescue Plan. The IRS is also has been ordered to look into periodic payments of the child tax credit to be paid in advance this year versus being a credit that you would just claim on your tax return next year. So that's another thing that we anticipate relying upon the most recently filed tax return, most likely 2020 is what they're going to look at when determining who's eligible for the credit and who should be getting the credit. You know, if you claim children on your return, how many you claimed, all of that can affect how much of the credit you'd be getting in advance. So that's another very recent development through the American Rescue Plan that may warrant people filing 2020 returns that may not normally be required to do so, but it could be a good idea to do it.
So I've heard there's a term RRC. What is RRC?
The RRC is the Recovery Rebate Credit. So that's the credit that you would claim on your 2020 tax return for any stimulus payments that you did not receive in 2020. So that would be the first and the second that I mentioned earlier. You would claim it as the Recovery Rebate Credit on your 2020 tax return.
Okay, so who is eligible for this? And more importantly, how do we get it?
Right. So eligibility is generally going to be based on whether the person claiming the stimulus has a social security number that's valid for employment, that their income is below a certain level. There's a cap around $75,000 for a single person. And they're going to need to claim that credit on the tax return itself. The IRS is going to match that information with what they have on file. So one of the issues that we're seeing is that the survivor may not have received their payment because their abuser took it, but according to the IRS, the payment was paid out. It's just that the abuser has it. So that's going to provide, I think, some challenges in getting your stimulus payment if the IRS thinks it already paid it out. But that's no reason, to not file your 2020 tax return. There are some provisions in the Internal Revenue Service's procedures that say in certain situations you might still be able to get your stimulus, even though according to IRS records it might have been paid out under your social security number. Unfortunately, it's not going to apply to all survivors. So this is something we've been working on for several months, and we're still working on this issue. Trying to get the IRS to issue replacement checks to survivors, but it's not going to cover all situations. So currently, if the tax return that the stimulus payment was based on was not a valid return, then you can argue to the IRS it was based on a return that was not valid and therefore should be reissued to you. And the way that process is going to work, and that we have a flyer that explains that process in detail. But basically what you're going to do is you're going to file the return. You're going to claim the recovery rebate credit for any portion of the stimulus that you believe you should have gotten in 2020 but didn't get. IRS is most likely going to write back and say, we already issued it, if that's what their records show. They may deny it at first. You will have 60 days to respond to the IRS, and that's where you would argue that the tax return that the stimulus was based on was not a valid return. So the first stimulus was based on either a 2018 or 2019 tax return, whatever was on file. And then the second stimulus was based on your 2019 return. The third stimulus that just now came out can be based on either your 2019 or your 2020 tax return. I know it's confusing, it's complicated, but that's where that flyer will hopefully also be helpful for you. It should provide a step-by-step guide as far as what you can do, because there are multiple stimuluses that could be based on different tax returns. I think the biggest takeaway should be that, whether you agreed or didn't agree to the filing of that tax return that the stimulus was based on, because there may be situations where you didn't even know a return was filed and the abuser filed it. You didn't agree to it. Maybe you felt forced to sign it and you couldn't question, whether to sign it or file it or not. Those might be situations where you could argue that the tax return was not valid. And, that's kind of IRS terminology, but basically it's not a true tax return because you didn't actually consent to it without being pressured, otherwise. So that's mainly how you might be able to get relief and hopefully get a replacement stimulus check if you have not been able to access it due to actions of your abuser.
Yeah, as you're saying this, I'm thinking that one of the big issues in these types of relationships is that, assets are always hidden. But also, I know in my own relationship, my ex-husband handled all the taxes. And I think that happens in so many households. Like the abuser with the power and control does the taxes and says, I took care of everything. And so a lot of survivors really just don't even know where to start. So like I'm thinking for myself too, with not doing taxes until I finally got out by myself. It just seems so overwhelming. So what do you think? And especially when there's children involved, which we'll get to in a minute, but do you think is there a first step that someone should take to even hear something like, don't believe everything that person told you. This is what you can do. Or do you suggest a tax clinic? Like, is there a phone number or a hotline?
It depends on the level of comfort. There are ways to contact the IRS either by phone or online to access your information. If you're not even sure whether a return was filed with your name on it, you can create an account with the IRS online, or you can call the IRS yourself and ask for transcripts of whatever tax years you're questioning. You would want to look at maybe the account transcripts to see, was a tax return filed under my social security number? You can see, like the number of exemptions, for example, which would correlate to the number of people claimed on the tax return, the income that was reported that year. So there's definitely some information that you would be privy to if you were listed as a joint filer on the return. So even though you may not have actively participated in the return, if it's under your social security number, you should be able to have access to that information and kind of start that process. It really is going to be, I guess, sort of a step-by-step to figuring out where things stand, because, what we see is sometimes there might even be balances that you're not even aware of because your partner is so secretive. There could be, you could actually owe the IRS under your own social security number and not be aware of it. And there are other remedies for things like that, known as innocent spouse relief, which we may get into here or in another video, to try to get relief from these balances that maybe you weren't even aware of to begin with, based on, filings that the abuser may have done.
Yeah. And as you're talking, I'm thinking that even just to take that first step of calling the IRS, it's like a step towards independence. And one of the things that we always recommend to anybody is to document everything. And so to have control, at least to be able to get, statements about your what's on your, attached to your social security number in terms of debt, taxes, et cetera, can be so important. Because those are legal documents as well and might have to be used as evidence. I know fraud is a big issue in a lot of these cases. So it's really important that people start sort of taking control of their financial lives.
Yes, absolutely. And I understand it can be overwhelming, because we're just talking about taxes, and there's obviously so many other areas of your life that, you may need to look into in terms of financial information. So that is something you can do on your own, or you can seek assistance from an organization like a low-income taxpayer clinic that'll do that work for you and pull the records for you. You're in a confidential relationship because that's your attorney, and they can help you get the information and explain to you, what it means.
Yeah, I think that sounds so comforting because, like you said, people in these situations are in survival mode in so many areas of their lives anyway. And to know that there's some kind of resource they can go to at least start taking care of that area, it would be a tremendous relief. All right, so let's start talking a little bit about claiming children, because that's one of the questions that comes up all the time. My ex or my husband claimed our children on the tax returns and there's nothing I can do about it. Like, how do you guys handle that?
Unfortunately, that's something we see a lot, whether it's between spouses or between just, parents of different children. And the IRS does have rules about who you can claim, and they're different depending on whether you're claiming someone as a dependent, you're claiming someone for the earned income tax credit, or you're claiming someone for the child tax credit. There are specific rules about each of those, but usually, some of the basics are the IRS is going to look at who spent more time with the child during the year. So who did the child live with for the majority of the year? And generally we're talking about nights, unless one of the parents happens to work night shift, then you kind of get into some complicated rules, but mostly you're looking at nights. Who did the children spend more nights with? So that may be based on a custody agreement. Maybe you strayed from the custody agreement, and if so, then it's probably good to keep your own separate records about, if there's trading, or, maybe someone relinquishes, a visitation or a couple of nights that they might have. And then you really break it down to the day. If it's equal, so both parents spend the same exact amount of time with the child, which I think you're not really going to run into that situation if the parents are not living together, but if the parents still happen to live together, then you might have a situation where they're both living with the child for the whole year. The IRS tiebreaker rules look at who had the higher adjusted gross income that year. So that might not always seem fair, but that's the tiebreaker rule. I can't say that situation happens a lot. It's usually parents living separately, sharing the children or the child. And then when it comes time for taxes, there are different things that can play into that. So if there's no agreement, then you really are strictly looking at, who did the child spend more time with, and do they meet the other requirements? Like, are they the biological child, or legally related to the person trying to claim them, for example? Are they the right age? So there are certain age limitations when it comes to credits and things like that. And then when it goes to the claiming someone as a dependent or for the child tax credit, that's something that if you do have an agreement, the custodial parent, the parent that the child lives with, can agree to allow the non-custodial parent, the parent that the child does not live with, to claim them. So sometimes you'll see in divorces, they may alternate years claiming children. The IRS allows that. There's usually a form that they require, Form 8332, that the non-custodial parent would file with their tax return, basically showing, hey, the kids live with the other parent, but I have their permission to claim them as a dependent or for the tax credit. But the thing to remember here is it's only for the dependency exemption and the child tax credit. The earned income tax credit, which is a credit that's geared towards low income working families, that's not something that you can give away. Not in any agreement, no divorce decree, nothing can give that away. So that's always going to be based on who is the child spending the majority of the year with. So even if the other spouse is claiming them as a dependent and for the child tax credit, if the child's living with you, most likely you're going to be the one that's eligible for the earned income tax credit.
Mm-hmm. And what are the consequences if somebody doesn't abide by the legal agreement and they file which happens all the time, I'm sure.
Right. What you're going to find is if, someone else claimed them, maybe they weren't, and, they weren't supposed to, but let's say they file electronically. When you try to file electronically, your tax return is going to be blocked from, being able to file electronically. So our advice in that situation is if you believe that your return is correct, you need to file that return by paper.
Okay.
What that's going to do is it's going to trigger an audit. And don't let the word audit scare you. I know it kind of sounds like a scary word, but essentially it's the IRS's way of saying we need more information from you to process your tax return. And if you can prove that you meet all those criteria to claim the kids, they lived with you, et cetera, they're going to grant you the credits, and they're going to turn around and look to the other person that filed and claimed them and ask for that money back. So I guess in that is sort of a warning. If you are afraid that there could be retaliation or that could cause problems, that is something to think about ahead of time, because although the IRS won't say the children's other parent claimed them, or they're really not supposed to say that, I think they can deduce from what's going on that it's probably, you that proved you were eligible to claim them. So in some situations that's a concern, in some situations that's not, but I just wanted to make sure to mention that.
Yeah, that's a really good point. I'm thinking just from dealing with the legal system for years, when something and everything taking forever. So say there's an issue like the one that we just mentioned. Do you know about how long it takes for the IRS? Is it like years like it is in the court system, or is it faster than that?
No, it shouldn't be years plural, but sometimes it can take several months. It really depends on how good your documentation is, for example. So if you have the proof right there that the kids lived with you and it's pretty clear and straightforward, like maybe a letter from the school saying the child lived at this address for the school year, this is the guardian that we had on file, you know, those are the types of letters we usually use at our clinic. If you've got the birth certificates, you know, what we would consider straightforward documents, but sometimes it can get difficult if the child is really young or maintaining records was not the parents' priority, and so they don't have good records showing that the child lived with them or where they all live together. I think that's where things can kind of be drawn out, because then you're really throwing sending things to the IRS hoping that they'll process it and allow it. But generally speaking, I would say that we can get these issues resolved in a few months. That's outside of a pandemic. So now I know with the pandemic, things have definitely slowed down. As far as the IRS is considered, things are definitely taking longer, things that we've submitted, to get processed. So take that with a grain of salt. It's not always going to be a quick resolution, but it should hopefully be quicker than dealing with the courts system that, you're saying can take years to resolve. So hopefully it wouldn't take nearly that long.
Yeah, well, that's good to know. Okay, so ready for the next question? Okay, so the next one is, what are the most common ways in which you see abusers using taxes to inflict further abuse or to further control victims?
Some of the ways, the most common ways that we've seen abusers use taxes to continue to inflict abuse or control are filing a joint tax return if they're a married couple, filing the joint return without the survivor's permission, or just filing a return in the survivor's name using their the survivor's own social security number and they're unaware of it, or claiming the survivor's children despite the abuser being ineligible to do so.
Yeah, and I was going to say, is it the same kinds of consequences, or are these criminal offenses?
These are primarily civil, but civil consequences, but forgery, I mean, there could be criminal liability as well if it's a forged return. And also, of course, filing using someone else's social security number that could also lead to criminal consequences. And the IRS does have a criminal investigations division that these kind of issues could be forwarded over to if there was some sort of intentional forgery or claiming with the social security number of the survivor.
Wow. So I'm thinking, in my head, I always think, okay, so it's an IRS thing and then you go to court, but it sounds like, Terri, you're saying that this could be something that the IRS handles itself.
Yes, that's correct. Yeah, they could handle it themselves. Like I said, like through their own civil procedures, or they could go over to the criminal investigations department. And then, also being federal, you could also get picked up, by the Department of Justice. They might work together to prosecute for criminal fraud.
Yeah, I'm thinking the question just popped into my mind. So knowing that this happens so often, is there anything that you can think of, if there's any way people can do this to protect yourself from something like this happening? Or is it like a lot of abuse that's sort of out of your control if you're in the relationship?
Kind of like what we've talked about, if you being like the first to file your tax return can help you get in a more advantageous position. Monitoring your IRS accounts can help you to see what income is being reported under your social. I mean, by that time, the income's already reported, but at least you might be able to be more aware of it. But really, I think that unfortunately, you don't find out that this has happened until you try to file. Like we discussed, like you could get blocked from filing your electronic return, and then you want to follow up with your paper return, and then be prepared to respond to any IRS notices that are issued in response to you filing your own appropriate and correct return.
I'm also thinking with something like this, how does it affect your own personal credit if somebody does this to you? Say your abuser does this.
So if your abuser does this, I mean, your credit, unfortunately, you would have fraudulent accounts that are open using your information, but I think you would want to go through perhaps, the credit bureau and make reports that your identity was stolen through those appropriate channels. That way that you can get relief through the credit reporting system.
And I just wanted to add, I agree with everything that Terri said. I want to add that it is possible to apply for an identity protection PIN number with the IRS. It's a program where you're assigned a PIN number at the beginning of every year that you would then file with your tax return, and your tax return won't be accepted without that PIN, and it's mailed to whatever address the IRS has on file for you. So that can be a way to, if you're worried about returns being filed under your social and it's been happening and you're trying to prevent it, that may be a method to prevent that. But I think the caveat there, the warning there, is that currently that's a program that you can't later opt out of. So once you sign up for the IP PIN program, is sort of the acronym IP PIN, identity protection PIN number, PIN, you're required to use that every year. So then you'll always have to get your PIN number from the IRS at the beginning of the year. It's going to be a different number every year, at least the way the program is structured now. And if you don't have it, it could block your return, if you don't have the PIN to put on your return. So I think you have to weigh the pros and cons of enrolling in that program, but it can be helpful for some in situations, especially if you're seeing repetitive filers, claiming using your social. And the program was recently updated, and I believe you should also be able to request PINs for dependents now too. So it's just something to be aware of. But like I said, once you opt in, currently there's no opt-out process.
Yeah, it's making me think of like password protection and using your fingerprint, like another level of security. I mean, just off the top of my head, I'm thinking, I don't know why somebody in this situation wouldn't want to do that, other than that their mail is being monitored, and what if, the PIN gets in the other person's hand. But it just sounds like
if you're moving a lot, sometimes, we've run into difficulties with our clients in that sense, where they moved and then they never updated the IRS, and so then the PIN is sent to their old address, and then they have trouble getting it, because they can't get it from the mail, so they have to try to get it in another way from the IRS. So sometimes that can cause complications as well.
Yeah. All right. What about, what are some other forms of financial abuse that you have encountered in your work?
So Terri touched upon it a little bit already, but we've seen in some of our cases, abusers using the survivor's social security number to open credit cards, to open loans, get financing, to even open businesses. And sometimes that can happen after the fact, or it can happen, during the course of that relationship. And, those can be resolved, but it, usually will take, the help of a professional to try to get those situations resolved on the tax side, as far as opening the business goes. But with the credit cards and the loans, I agree with Terri. Probably what you're going to need to do is reach out to the credit reporting agencies and reach out to the credit card company, the loan company, to dispute, whether that was actually something that you took out in your name or if it was actually fraud. And that's something you can keep track of by monitoring your credit. You are entitled to one free credit report from all three credit reporting agencies. We usually refer our clients to www.annualcreditreport.com, and that'll entitle you to one free credit report every year. We're not affiliated with them or anything, and I'm not backing them in any way, but we do use that service or recommend it to our clients in order to get their free credit report. Sometimes you won't notice anything on there that stands out, but sometimes you will. And then, that's how okay, I might need to dispute this. And also my information might be compromised. So I might need to take extra precautions. I know some of the credit agencies might offer monthly monitoring, things like that, that you can enroll in. But I think usually there is a cost for things like that.
Yeah, I'm thinking back to years ago when I first filed for divorce, and my excellent divorce attorney said the number one thing you have to do is protect your credit. Other than your safety, protect your credit. So this is so important. And like we've said, financial abuse is rampant in these relationships in so many insidious ways. So what options do victims have to protect themselves or find relief regarding taxes?
So one of the biggest issues that we've seen in our clinic, before all of the issues that have to do with getting homeless, the biggest intersection with taxes and domestic violence comes up in the sense of joint tax returns. So if you file a joint tax return with your spouse, by signing the return or by agreeing to the filing of the return, you're telling the IRS that you're agreeing to be held responsible for any balance owed on the return. And in some situations, the return is filed with a balance. In other situations, the return is filed, maybe there's no balance due, maybe there's a refund due, but then later the IRS audits the return, questions things on the return, and it could result in a balance due on that return. So there's relief under the Internal Revenue Code. It's generally coined, the term is innocent spouse relief, but there's actually 3 different forms of relief under that, where you can file a claim with the IRS and you file a form 8857, and you can argue that you should be held innocent of that joint liability. So that's why it's called innocent spouse relief, because you're saying I'm an innocent spouse, I shouldn't be held responsible for this joint debt. And there are different criteria based on the different facts of the situation, because you can have a lot of different situations where maybe you weren't aware of the tax return, you weren't aware of what was reported on the return. Maybe you were, but because of threats of abuse and other threats or pressure that you're under, you felt like you couldn't question the return. So it's really going to be fact specific what type of relief you would qualify for. But we see that come up, that intersection of domestic violence and tax a lot of times in that situation, because the IRS will take into account if the claimant is a victim of domestic violence or abuse, either during the year that the tax return was filed, or otherwise, maybe there was a history of abuse that contributed to these financial situations. So the IRS does take that into consideration very seriously when they're looking at these claims.
Yeah, that's really interesting. And again, I can't help, listening to this and thinking of my own past relationship, where financial abuse was one of the number one ways that he had power and control, but he had a number of different properties with one of his siblings that he said verbally they were doing their own taxes, but then his accountant handled our joint tax, and he'd just say, just sign. And I of course didn't pay attention and trusted him. And, when the divorce occurred, and we had been together about 18 years at that point, it came out. I said, where are all those tax, when you're gathering documents, where are all those tax returns that you did with your sister for your property? He's like, I didn't do any tax returns with my sister. That was all on ours. And so he had been falsely claiming all kinds of things, and my name was on those tax returns too. So, that was pretty scary.
Yeah, and it's definitely one of those things where if you are able to get out of the situation, you're trying to get out of the situation, that's one of those things that can kind of follow you. The IRS has 10 years to collect that debt from you from the date that it's assessed against you. So, if your name is on that, whether or not it's rightfully so, that can follow you and in some situations prevent you from being able to move on to that next step, become financially stable. So we're able to, provide services in that area. We've had some really great success for our clients that a variety of different situations, but usually, a lot of things are the same across the board. Things like, your spouse is really secretive with the finances, might have even had the mail sent to a different address, or was always the first one to rush to the mailbox to get the mail so you couldn't see it. You were never involved in financial decisions. Maybe you didn't even have access to the bank account. So there's a lot of things that tend to, we see, you know, in a lot of these different cases, though the facts might be different. A lot of times the characteristics of the abuser might be pretty similar when it comes to financial abuse. And sometimes you might not realize it's happening, kind of like what you said, you know, you trusted him, you signed the return, you didn't maybe at that point have a reason to question it. And then later you find out, oh gosh, you know, maybe I shouldn't have signed that, or there's something on there that I wasn't aware of.
Right. And every single thing that you just listed it happened in my situation and more. So I know if everything you said applied to my situation, that so many people have the same things. And the 10-year thing, we interviewed someone about her own experience with extreme financial abuse. And even though she's been out of the relationship for more than 10 years, she said the IRS still will say, you know, they're still going after some of the things that, you know, had to do with the debt and fraud and stuff. And she's married, she's remarried, but she said even her ex has tried to get her new husband's taxes involved. You know, it's just always, it's like, you can't get rid of it. Yeah. But she said it's been 10 years of still dealing with in the wake of the financial abuse from the first marriage.
Right. It can have lasting consequences, unfortunately.
Yeah. Now, I know that you also had mentioned something about being a first to file. That's a sort of, someone in that position is better. Why is someone who files first in a better position?
Do you want to take that, Terri?
Oh, sure. Yeah. So if you're first to file, of course, no, like all your information is on record with the IRS. The person that's in second they will be the one to end up getting the return rejected, and then they will have to then go through the process of getting the supporting documents and trying to challenge the first return. So you know, being first is more advantageous. That way, at least you don't have to go through as much as the procedure to provide supporting documents. And even if the audit does happen and you, as the first person, might have to, you might still have to provide some supporting documents, but like being there first will at least eliminate, I guess, some more of the, questioning from the IRS as far as the ability to claim the child.
Yeah, I know that this has been used as an intimidation tactic because some people in our community have said, well, my ex or my abuser already filed the taxes, so there's nothing I can do. I'm stuck.
Right. And that's not true. So if they believe that their tax return was correct, they need to file by paper. Mm-hmm. You know, and it is a process. You do have to gather documents to show the IRS that your tax return is correct, but at least, you know, then you might be eligible for a refund where otherwise you might even end up owing if you're not going to get to claim, you know, the kids that you think you might be eligible to claim. So, you know, the IRS matches information and they're not going to let more than one tax return claim the same child, claim the same social security number. So that's where those rejections come up, because if they already have a return on file with a social or claiming that dependent, they're not going to allow a second in claiming that same information. So that's where those rejections come in, you know, with the e-filing, especially, that may force you to file a paper return. And, you know, the drawback is paper returns take longer to process, especially right now with COVID. Their resources are limited to processing those returns. Like, I think there's still a couple million behind on 2019 returns. That was the latest statistic that I heard. So if someone filed by paper for 2019, there's still at least a couple million that they're trying to work through processing. So that can drag out the process if you're the one that later has to file by paper. But I think that's a chance for you to establish, you know, to stand your ground and say, like, I'm not going to let you keep doing this. And, you know, we have clients where I think we're on like the 4th year of her husband still claiming her kids after we've successfully proven to the IRS. And I know that now he owes, because we know he got refunds and now he owes them back, because we were able to prove to the IRS that our client was correct. So she got her refund. So we know that he's going to owe the IRS, but he's still doing it. And I don't, you know, I'm not sure if he doesn't understand, or if it's one of those situations where, you know, it's like a vindictive thing, or it's a way of kind of getting back at her. I'm not sure.
I think also a lot of these, sorry, I was going to say a lot of these people, they just feel they're above the law. So, and until the consequences hit, they don't think it's going to happen.
Right.
And I would say, like, I guess if the survivor does, they have the appropriate right to claim the child, and they do file first, the abuser filing second, and if they get that rejection email, like trying to e-file, it could just stop them there, and they might just remove the child because they know they won't have the documentation to support that this child lives with them. So that could also just stop the audit altogether. So that's why it's good to be first if you know you have everything, the right to claim the child, because the abuser likely will not be able to substantiate the claims that they had, the dependent claims. So it will put you in a better position.
Yeah, that's a great point. So how early can someone start filing to be first?
As early as filing season opens. So this year it was delayed, I think, until maybe February 12th or 12th. But normally it's the very end of January, and sometimes the software will even let you input the information. It just won't let you file until the first day of filing season. I think the challenge there is sometimes you don't have all of your documents by then, so you might be waiting on a W-2 or something to come in. And you do want to have that information, because if you are reporting things that don't totally match what the IRS has, then they could question that return, and it could stall things. But you can file as soon as filing season opens if you have all the information to do so. And that kind of reminded me too, it's always good to keep good records, like you said, and especially in situations with children. So if you are in a contentious situation about who's eligible to claim the children, who are the children with more, you really want to keep those records. Is the child on the lease? Does the school have your address on file, or does the doctor have your address on file for the child? Do you have the birth certificate handy, that you can access it if you need to? So planning ahead, are you on the utility bills? So you can show that you were living there too with the child. Keeping those records can help, especially if you're anticipating an issue, because then you're not waiting for the IRS to audit it and then you're scrambling to get all the documents together. You already have the documents, and the IRS only has 3 years to go back and question your tax return. So usually what we recommend to our clients is to hang on to those records for at least 3 years. So any tax return, supporting documents, things like that, usually after 3 years, you should be fine. If there's fraud, the IRS can go back 6 years, but typically it's just a 3-year look back at, at the returns if there was something that they were going to question.
Yeah. I'm so thrilled. Like, you're giving such great information, especially because, what both of you are saying are things that people can do to start taking control of their lives back in general, and especially with money, because it's so tremendous. So I'm thrilled. Thank you again. I know we're not done yet. I'm loving all this information. Okay. So then probably my last question, I'm guessing, is what are some things that victims can do to avoid further financial abuse from their abuser?
Okay, I think we've talked about these like throughout, but just to summarize again, creating your own IRS account online can be helpful so that you can monitor what kind of income is being reported under your Social Security number. And also checking your credit report and monitoring that. We discussed that annualcreditreport.com is a good resource to be able to check and see what accounts have been opened using your social and what your credit report is looking like.
Just a reminder, if you believe you were eligible for a stimulus payment but didn't get it, the first and the second payments that went out, you will need to claim those as a credit on your 2020 tax return. And that can be for you alone or you and the children if you also have children and think that you were eligible to claim them for the credit. The IRS may issue that as a refund to you, or if their records show that that payment already went out, that may start a process where you would need to argue with the IRS to show them you'd never received those payments and therefore they should give them to you. And right now, one of the clearest paths to that is if you can argue that the tax return that the stimulus payment was based on was not a valid tax return, meaning you did not consent to the filing of the return. It was forged. It was fraudulently filed. We've seen that with some of our clients where the abuser filed the return not knowing that after the survivor left, they did work a small job. So, they left that information off. So things you might be able to do is to still go back and file your 2019 tax return, even though the abuser may have filed a joint return with you for that year. But the goal would be to prove to the IRS that you didn't get the stimulus and therefore you should be eligible to get it again. And then just another reason to file your 2020 return. There is a new round of stimulus going out, the third round, based on the American Rescue Plan Act that was recently signed into law a couple of weeks ago. And that's going to be based on your most recently filed tax return. So it's important, maybe even if you're not required to file, to go ahead and file to get that, get your information on file with the IRS. You can include direct deposit information for your refund or for further stimulus payments, because the pandemic is ongoing. We don't know. There could be another round. Who knows? We had a couple here kind of back to back, because we had the second round went out in January, and now in March we have our third round. So who knows? There could be more coming, and you want to make sure that your information is updated with the IRS so that if you are eligible, you're getting those payments. There was an online portal last year, but the IRS made the decision not to do an online portal for the stimulus payments this year. So we are encouraging folks to file their tax returns, even if they may not be required to do so. And there are free resources to do that. So if you have access to a computer, there are free tax return preparation software companies offering free tax preparation software. You have to do the return yourself, but you can find that through the IRS website. And there's also a federally funded program, the Volunteer Income Tax Assistance Program, where you may be able to get your returns prepared for free if your income for the year is below a certain level. I think in Virginia for this year, it was 56,000 or so below, and they would prepare your return for free. So that's another great resource. And you may also have that in your area. It's a national federally funded program, and it's free because volunteers offer their time. They get trained to do the returns, and then they help folks do the returns. I know some of them are in person, but some of them are doing just like a drop-off service. So if you are concerned about the pandemic and COVID and everything, they are taking certain precautions in that area as well.
Okay, great. Well, thank you so much for all of this really valuable information. And I keep thinking, this could be, again, like I said before, the first step on someone's path to become, to getting financially free and hopefully independent.